Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we continued our futures trading course with a look at how to add quotes to our demo trading platform. In today's lesson we're going to continue our module on how to place futures trades with a look at the advantages and details of trading the E-mini S&P contract, which is the contract that we're going to be focused on throughout the rest of this module. So let's get started.
As we discussed in our last lesson, the most popular futures contract among individual traders is the E-mini S&P contract, which tracks the price action in the S&P 500 index. There are some major advantages which are specific to this contract and the futures market in general, which traders find appealing. First is the relatively small trade size of the E-mini S&P. The contract is 1/5 the size of the regular S&P contract, so a 1-point move in the market is equal to $50 per E-mini S&P contract instead of $250 per contract for the full-size contract. Number two is it's a completely electronic market. There is no open outcry trading for the E-mini S&P contract, so all trades are made electronically, which many traders feel puts everyone on a more level playing field. Number three is it's a highly liquid market. The E-mini S&P contract trades millions of contracts a day, meaning almost 24-hour liquidity and very low transaction costs. As far as general futures market advantages, number one is that there are no day trading restrictions. Unlike the stock market where you must have at least $25,000 in your account in order to day trade, there are no such restrictions in the futures markets. Number two is access to much lower margin requirements. Day trading margins for the E-mini S&P go as low as $500 per contract, giving traders much more access to buying power than in the stock market. It is important to remember here, however, that leverage is a sword that cuts both ways, meaning that just as you can increase your profit potential through the use of leverage, this also increases your loss potential, something which we will cover in future lessons. Number three is no interest paid on margin. Unlike the stock market where you pay interest on margin used, you do not pay any interest on margin used in the futures market. And finally, tax advantages. Futures traders are generally taxed via the 60-40 rule, meaning that 60% of gains are treated as long-term capital gains and 40% are treated as short-term capital gains. For most short-term traders, this tax treatment is a large advantage over the stock market, where 100% of short-term gains are taxed at the higher rate. Now that we've covered the advantages of the futures market and the E-mini S&P 500 contract specifically, here are the general details about the contract which traders will want to know. First is the trading symbol. As we've discussed in previous lessons, the trading symbol for the E-mini S&P is ES followed by the symbol for the month and year. This lesson was originally posted in January of 2009, so the active contract month is March, making the full symbol for the contract ESH9. Next is the contract size, which is $50 times the index. As of today's lesson, the last closing price for the E-mini S&P was 885.50, which would make the contract size 885.50 times $50, which equals $44,275. Next is the minimum price fluctuation, which is 0.25 points or $12.50, which equals a 1-tick move for this contract, or the minimum price fluctuation that the contract can make. Next is the trading hours. The E-mini S&P market is open from Sunday night at 5 p.m. Central Standard Time until Friday at 3:15 p.m. Central Standard Time, and except for between 3:15 and 3:30 p.m. CST and 4:30 p.m. through 5 p.m. CST when the market is closed for maintenance. The contract months are March, June, September, and December. And finally, the last day of trading is 8:30 a.m. on the third Friday of the contract month. Now that we understand some of the advantages of trading the E-mini S&P, as well as the details of the contract, we can place our first demo trade, which will be the topic of our next lesson. As always, if there's any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.